I absolutely love what we're seeing in the charts right now. And it's not really surprising. This is what we talked about earlier this week. We talked about sweeping some of those lower 50s. We talked about getting close to 62 cents, all of which we've done. And now we have this kind of run up to the jobs report. And it's a question of, do we see a sell the news event, or do we get enough life to extend this run that we're on right now? And I do want to talk about actually a few things that took place yesterday. I want to talk about this 800% imbalance in terms of ADA as well. So if you guys are new or haven't already, show your support for the channel down below. Hit that subscribe button, that bell. They're free to do. They'll keep you updated anytime there's new content live here on the channel. So I love to see what ADA is doing right now. Extending this breakout, it's up about 11% over the last 2 daily candles here. Obviously up about 3.46% today. Yesterday was 7.75%. So we are up over 11%. So love to see that breaking that 20-day moving average. We have a bullish cross on the daily stochastic RSI. This is a great spot to be right now. And again, it's just going to be a question of, how does U.S. money react today? Do they continue the trend, just kind of like we did yesterday, where we extend the trend? That's what we'll call it, guys. Drop that in the comments down below, where we got to this point where the market pumped and then U.S. money pushed it higher, right? Maybe we'll get this and we'll get a little push higher. We'll see what happens. But BTC is giving us a little help here too. BTC actually broke out once again. Well above the, obviously it's 20-day moving average, beautiful bounce off of that, bullish flip on the daily stochastic RSI. So everything's kind of aligning in a perfect way. I will say we're also on the verge of a potential BTC dominance breakdown. Right now we're sitting right on that 20-day moving average, and we could be talking about getting down to about 64.75% or so. And if that does happen, we have a possibility of extending, right? I'm not ready to say that it's this, exciting moment in May here where we had this huge breakdown, but that's the potential setup we could be trying to at least work towards here. All right. Now, I will say also USDT dominance breakdown. You're seeing more confidence from altcoins, which is why we're seeing green. That's why everything has had some nice runs on these last 2 daily candles. And we just need a bigger confirmation to the downside. Right now we're actually, it looks like sitting right on the edge of this trend. Yep, right on the edge of that trend. So that's where we need to extend down from. I'd love to see us get to about that 4.45%. That would be a great spot for the market to make a decision. Not saying that has to happen for sure, but I will say that right now we still have a lot of short leverage above here. Some long leverage has crept up. So you could be talking about some pretty wild rides as the day progresses. Now, really what gave us a lot of help yesterday is the exact thing that we talked about. I said that we'd probably have a snapback day from institutional money. We did. Largest day of the week, $407 million worth of BTC accumulated by institutional money. And that's without BlackRock doing anything. That's great to see. What I also want to say is that we finally gotten to this point where we're hitting that weekly volume that daily volume that we discussed, $130 billion in daily trading volume. So the market is lived up a little bit. Now, what I will say is we're heading into a 3-day weekend. There will not be institutional money. Those days are more quiet. And the question is will retail get antsy, or will they actually decide to hold their bags for once? Well, I'm not sure. We're going to have to watch and wait and see. I want to remind everybody, obviously, July 4th, last year sucked. We went through a big dump in the crypto market. This isn't that. We don't have the same negative events taking place, although I will say that there was a little bit of a surprise that hit the market yesterday that I was surprised that the charts did not react to, and that was that the SEC has halted the conversion of Grayscale's digital large cap fund into an ETF, putting it under further review. Now, this doesn't mean that it's not happening. It just means they're taking more time with this. And you guys can obviously see my reaction. I was definitely surprised that this was the case. Normally they don't do this and then backtrack. So not exactly sure why. Maybe it's just to see like where these assets are held, because obviously this is a spot ETF. So there will be actual assets backing this ETF product. So that's maybe what it is, just more of like an audit per se, if you will. But again, when this is officially confirmed, once again, that's really a big deal for ADA, because that essentially green lights an ADA spot ETF, because all the underlying assets are not unregistered securities, and away we go, right? Now, something I did want to talk about here is the ADA BTC chart. And the reason why I'm saying that, or why I'm referencing this and talking about this so much, is we're still doing exactly what we did back here in November. Okay. Doesn't have to play out perfect, but we're sitting right on the edge of that 20-day moving average. Just take a look back here. This was our focal point of resistance in that ADA BTC chart. either rejection or breach. Rejection or breach, right? That's right where we're at. And if we do get a breach on this, you could be talking about an entire structure breach here, something where ADA runs kind of hard versus BTC. I do want to reference the fact that we've seen a lot of ADA accumulation and removal of supply. We have a lot of short interest still well above here. Let me actually zoom out and look at the 1 month chart in terms of ADA. I might not even be able to see all of this, but just look, guys, there is a ton of shorts still trying to suppress price in the crypto market. And actually, just to give you guys some context here, there was about an 800% imbalance of shorts to longs liquidated over the last 24 hours. It was $1.72 million. Not saying that that's, a crazy amount or anything like that, but versus only $220,000 in longs, it's a pretty distinct difference there. Something I wanted to point to as well here is we are very much on the long side right now. Been a lot of longs opened up over the last 24 hours. You guys can see open interest up 7.93%, despite having some of these big liquidations take place. And you guys can see open interest on the rise. So that's where I would just say, we got to obviously be a little bit cautious. We don't have this confirmed, big boom extension or anything like that. We're in a good spot and there's some good confidence filling in. But just be aware that there could be some retracements and profit taking and things like that come along with this. Okay. It's a weird weekend. I would love if tomorrow the markets were open. They're not, the stock market. I would love if we had institutional money tomorrow. We're not going to. Okay. Kind of is what it is. So there's something important I do have to show you guys in a later ADA video. And I can't believe we didn't notice this before, but we're going to talk about that. But that's what we have going on for today. Big thing is the jobs report. Prepare for this, but hopefully everybody is in a little bit better mood today. So appreciate you guys. Have a great day. Show your love below. Catch you guys in the next one. Take care.